Good morning, everybody. It is about 6:06 a.m. here on the West Coast. I've been up for about an hour and a half. I'm caffeinated, and I just completed I just completed 5 sets of 5 burpees with a 24-pound weighted vest on. So I am pumped up, ready to go. Might even be a little bit out of breath. Let's dive into the financial news for today. So let's start off with the usual coin market cap. I've been checking the prices. Let me just make sure this is refreshed. Yeah, there we go. Got a little bit of a sea of green going here, folks. Not too much in the red. I always look at it by rank, but if you want, you can actually organize it by change, like see which ones have pumped the most in the last day and which ones have dropped the most in the last day. I don't really know anything about any of these other than Ogor is available on Coinbase, but I don't know anything about it. Anyway, I like to keep it, based by rank like probably most of you guys do. The one that I'd like to pay attention to here is XRP. If you don't know about XRP, it is a coin created by an actual company called Ripple with their headquarters in San Francisco, so they're definitely a tech company. They are the remittance and banking coin. That's their use. Like, banks have been using a system that's been around for 50 years called SWIFT to send money around the world. It is incredibly old. It is incredibly slow. If you try to send money from America to the Philippines, it will take days. Go ahead and try it via Western Union, but you could essentially always send crypto, but XRP is kind of the use case coin for this type of thing. They've got a lot of partnerships with banks, and if they actually get banks to use the XRP protocol, banks will be able to send money around the world at minimal charge, blazingly fast. XRP had an all-time high of about $3.50 in early 2018, and God, I wish I had bought some at the beginning of 2017 when it was about a penny. There's some people who are definitely millionaires, if not billionaires now, thanks to XRP. But a lot of people complain that it's centralized, being controlled by this company Ripple, and Ripple can do whatever they want. Ripple, in their defense, will say, hey, we could shut down our doors tomorrow and XRP would still exist, and developers could still weigh in and vote on the direction of the coin, similar to Bitcoin and Ethereum and all that. So that's what they say. Naysayers will say it's too centralized, but it is the third ranked coin, just surpassing Tether by not much in crypto terms. Looks like by 700 million or so. So there you go. It's kind of been going back and forth here. These two have been swapping places, and Tether is a USD stable coin. So some people want to keep dollars in the market and try to keep their dollars liquid in a sense, and Tether's the way people do that. Tether's had its issues as well. So Bitcoin is holding well above 11,000. It has pumped to 11,000 in the last couple days and seems to be stable there. A lot of people are saying we are on the cusp of the next bull run for this year, and that July 2020 looks a lot like July 2017, but we'll see. In other news, gold is still kind of at that all-time high price or near it, at about $1,961. Let me see if we just refresh this. $1,958. Now, a lot of people think gold is already too much and that it's not going to pump much higher. I kind of believe that, to be honest, but we'll see. The thing is, the United States is about to print trillions more dollars, folks. Trillions. People are absolutely going to see the ridiculousness of their dollars going down in value. Because you know what happens, folks? You all of a sudden get the government printing trillions of dollars, but let me tell you what doesn't increase: your salary. So your dollars become worth less and less in an inflated market, but your salary stays the same. Nobody works for a company right now that says, oh, well, there was some economic stimulus this year, so we're going to adjust your salary accordingly. No company does that. So if you're paid a salary or an hourly wage from a company, your money's going down in value every time the Fed prints out trillions of dollars, and people are going to be fed up with that, and they're going to be moving into gold. On my video yesterday, we talked about how the United States imported a record amount of gold from Switzerland. And a lot of people are thinking possibly heading towards a gold standard. That would be amazing, personally. I like the idea that the Fed can't just print money nilly-willy. Now, silver had an all-time high of 50-something dollars in 2011, so there's still a lot of upside there. Personally, I am not a financial advisor, but I think silver is the play here, folks. And I did just buy more. You can get American Silver Eagles, which is probably the easiest way to get silver from a number of websites, okay? Crypto Slate. Let's check it out. Anything we need to talk about here? Ethereum's 2.0 validator launchpad is live, but is Ethereum 2.0 live? No, it isn't, and we honestly don't know when it's going to come. Let's see what this article says. I'm curious if they talk about it. The development comes after months of hard work from ETH 2.0 research team. Okay. Yep. I guess a validator is for proof of stake. In plain English, if the total amount of ETH staked is low, the annual reward is high, but as the total stake rises, the reward received by each validator starts to fall. Interesting. So, like, you don't want to stake too much? That's interesting. I'm definitely going to do my best to stake the 32. Let's see if they talk about that, but they've mentioned that you need to stake 32 ETH if you want to be your own kind of staker. Otherwise, you have to pool in with a pool. No problem. This looks very technical. Not really interested in reading this. I am just curious about when ETH 2.0 is coming out. Do we have any news there? Because we were told it was going to be this year, this summer. Now it's looking like early next year, but we've been hearing that for years. Okay, there we go. It said top developer says Ethereum 2.0 will launch in 2020. Ethereum, folks, is the number 2 coin next to Bitcoin. It's probably the second crypto that ever came out, really. You know, Bitcoin was the only one for a long time, and then Ethereum came around, and people who bought it when it was pennies and dollars are pretty happy right now. The use case is that it's similar to Bitcoin in a lot of ways, but it is the smart contract token, and Brazil, Russia, and a number of other countries have said they are going to develop and adopt it into their systems, whatever that means. Let's see. Ethereum Foundation researcher Justin Drake caused quite a stir earlier this month when he said that ETH 2.0 to launch properly, developers would need at least until January 2021. This comment was controversial because for months investors and other stakeholders in the cryptocurrency industry were certain the launch would take place in July or August of this year. Exactly. That's not to say that Drake was promoting FUD, fear, uncertainty, and doubt. The reason why he suggested the launch should be in Q1 2021 at the earliest is that he had concerns about the security of Ethereum if the upgrade was rushed. Right. Let's go down here. A top developer asserts ETH 2.0 will go live in 2020. Despite what some reports may lead you to believe, Afri Shodan is still an active member of the Ethereum community. At current, he is working on ETH 2.0 multi-client testnets that are essentially needed to allow for the upgrade to go live. In a recent review with Paradigm, as one of the developers leading the charge on the upgrade, Shodan said that he thinks 2020 launch date for upgrade is still feasible. Feasible. Okay. This is just some hype. I would not count on this happening, guys. I do believe it will still be 2021, or maybe even later than that. Let's move on. A little bit of geopolitical stimulus news from Forbes. There will be no showdown over the next COVID-19 stimulus bill. Pelosi already won. Looking forward to the great partisan battle over the next C-19 relief bill? You may be disappointed. Nancy Pelosi has already won. True, the $1 trillion Senate GOP plan is just 1/3 the size of the $3 trillion HEROES Act, the stimulus bill passed by the House back in May, but in broad strokes, the plan offered by Senate Majority Leader Mitch McConnell and President Trump largely mimics the House version. Democrats and Republicans will struggle over important details, but the battle will be fought almost entirely on the Democrats' ground. You know, I'm really curious, is Trump going to get his 6% payroll tax cut? That is what he wants, and he has said he won't sign another stimulus bill without payroll tax cut, which, by the way, if you're on a payroll for any company, you want that. That's more money in your pocket. I'm very curious. Let's see if it goes into that. Like the House bill, the Senate GOP version includes more federal unemployment benefits, more direct payments to individuals, more assistance to small businesses, and a larger employer tax credit to encourage firms to retain or rehire workers. The House initiatives are enormous in size and scope. The Senate GOP version is merely big. The one exception, the House would provide about $1 trillion in aid to state and local governments to help offset their increased costs and failing revenues caused by the pandemic. Yeah, let me actually take an opinion here and say that's BS. The $1 trillion is going to go in aid to state and local governments who let people riot all over their streets and basically burned everything to the ground. That's really what's going to happen. And my computer is stuck here. Interesting. Can I refresh this? Is there a refresh button? Whatever. That's my... Let's just do this. Okay, X out. Wow. I'm probably going to have to close my browser. Let's see. It's these ads. These ads are crashing me. Get out of here. Let's just see if payroll is on the menu. There we go. The House would limit a CARES Act provision that allows businesses to use current and recent tax losses to lower prior year taxes. McConnell would retain those provisions. The Senate GOP bill would also create a new refundable payroll tax equal to 50% of an employer's qualified employee protection expenses, such as C-19, protectable personal equipment, cleaning supplies, and some workplace redesign. This credit is not in the House bill. Interesting. It's not exactly the payroll tax cut that I hear Trump talking about, or maybe it is. It seems to be worded a little differently. But let's see what their conclusion is here. No matter the timing, in the end, the White House and McConnell understand that without massive additional assistance from the Fed, the teetering C-19 economy could collapse just a few months before the November elections. They also know that McConnell does not have enough GOP votes to pass his own plan, which the Senate will never vote on. He'll need Democrat support to enact a new stimulus. Failure to pass a relief bill would be catastrophic for the re-election chances of Trump and the growing list of endangered Republicans. My goodness, folks. The United States is about to print its way into hyperinflation. What do you think is going to happen when C-19 ends, by the way, folks? Let's just say vaccine or virus disappears. What do you think is going to happen next year when everyone's back to work? The prices on goods are going to explode unless we have a deflationary event, which, by the way, isn't a great thing either. If we do not have any kind of deflationary event, everything is going to explode in cost. That's why a ton of people are buying gold and silver right now and Bitcoin to hedge against this hyperinflation that could be coming. It's kind of a scary thought. When everyone's able to get outside and feels comfortable spending at restaurants and going out to sports games and going out to concerts and movies, and we get back to the previous world and the previous normal, the currency that was printed is going to jump, or it's going to inflate. Like the value of all those dollars that were printed are going to drop tremendously. Your houses are going to cost millions of dollars. Cars are going to cost $100,000 or $200,000 instead of 30. It's not going to be pretty, folks. That's why people are jumping into crypto and gold and silver and whatnot. Let me close this out before my computer crashes. In other news, I found this article on Zero Hedge. Markets have turned into the most astounding circus the world has ever seen. Before I even read this, let me say I do think it's a circus. Everything I just told you. There really is no reason that the stock market, the NASDAQ, the Dow Jones, the S&P 500, they shouldn't be where they are. A lot of these stocks are super overvalued right now, in my opinion, and I'll be honest, I moved a lot of money out of stocks into precious metals recently. Again, that is not financial advice, but my stocks were in the green, and I said, F it, and I decided to move them into metals because I think this market is totally not realistic and makes no sense. Now, you can jump into the market and say, well, you don't believe in the God Emperor, have faith in the plan, have faith in Q and Trump, and the market will always be good. It's Trump's market. I want to believe it, but I just can't take that risk. There are folks who are about to be on their butts when this rent forgiveness and mortgage forgiveness stuff just ends completely. We can't just keep people not paying their rent and mortgages. I don't see a way out of that. I think it's going to get real ugly, and I got out. Not financial advice. If you think I'm wrong, by all means, tell me in the comments below and tell me why I'm an idiot for selling my stock, and give me a reason to jump back in. I really want to listen, and I really want to be taught new things. So tell me about it. There ain't no such thing as a free lunch part 3. In previous articles, I examined the negative externalities of post-Keynesian measures like unlimited monetary easing, right, printing money. First, I explained that such policies were inflating asset prices, squeezing working and middle classes, and thus leading to a core deflationary impact on the rest of the economy. Then I wrote that too many bailouts might lead to morale hazard and zombie companies, undermining future economic growth. If such policies tend to weaken the economy, then why assets like stocks, bonds, and real estate keep on rising? Yeah, exactly. Greed is good. As already mentioned, bonds and equity markets have been more and more driven by the Fed put narrative. Besides, households might see the drop of interest rates as a screaming buy signal in the residential real estate space. People have been taught that any correction should be regarded as a huge investment opportunity, so everyone is willing to join the party. Fear of missing out is a powerful catalyst, otherwise known as FOMO, especially when wages inflation is so low that all you can do is hope for significant returns on investment markets. If the Fed has our back and if Pelosi is right about the stock market floor, then why not take risks? Narratives and fantasy. Even if people love to state that the market is not the economy, assets like stocks, bonds, and property are supposed to reflect economic value somehow. However, GDP growth has been decreasing for decades in Western economies. Don't even get me started on that. Once again, it's important to realize that markets are intersubjective frameworks and that they are driven by narratives. As long as people believe that the dominant narrative is true, extreme valuations may remain a reality. But if doubt rises, then the whole house of cards is likely to collapse, especially as economic fundamentals do not support current levels. The new gold rush. More interestingly, it seems that the market has just entered the buy everything moment with speculative behavior spreading to gold, euro, and even Bitcoin. Right. Just like I told you, people are buying precious metals now. Like I showed you in the video yesterday, I think, Tim Pool, who is a very well-known political commentator and never talks about finances, had these kinds of ads, all over his video. He shares screens just like I do. He had gold coins here. He had gold coins here on the side. Like, he was definitely recently doing a little gold, purchase speculation, or maybe he pulled the trigger on a bunch of coins. So I have been bullish on gold since 2014, as I've always thought that the money printing would reduce the purchasing power of money, pushing precious metals price higher. However, I think that we should not confuse the fundamental catalyst with FOMO, and I tend to be skeptical about any asset going parabolic, including gold and silver. Right, because we've never really seen gold and silver skyrocket the way like a Bitcoin has. Like, Bitcoin has gained 50,000% or some ridiculously high number since its inception. Gold and silver just haven't worked that way. But is that because they have been artificially manipulated to keep the price down? Some people think so. Some people think that the rich people create false paper contracts to keep the price down, and that it's just a beach ball being submerged underwater, and it can't stay underwater much longer, and it's going to shoot out the water in any minute. In my opinion, people believe that anything from stocks to metals can make them rich, but in economics there is no free lunch. In other words, without economic growth, there might be no wealth creation in the long run. One could argue that gold price is reflecting a sudden drop of confidence in U.S. dollar. Yep, I would argue that. But I tend to disagree with that, as it is not consistent with T-bonds trading at historically low yields. Moreover, if people were losing confidence in the dollar, then why would they see the euro as a safe haven? It would not make any sense, as the eurozone appears as a more and more fragile entity. Agreed. I would definitely not buy euros. That seems super weird. But maybe the European Union is not printing as many euros as the United States is printing dollars, and maybe that's why people are moving to it. I agree with the idea that post-Keynesian policies will have a deep and durable impact on the dollar, and I do believe that China will soon unveil a monetary scheme that can challenge the dollar monopoly. However, I do not think that current speculation on gold has anything to do with the end of the dollar. It is all about greed and FOMO, nothing new here, and we already know how it will end, but we must admit that asset markets have turned into the most astounding circus the world has ever seen. However, every fantasy has a price. Very interesting article, and not exactly what I have been saying either. So definitely, look into what this person is saying. This is Tyler Durden. Yep, and they're probably right. Honestly, they probably know a lot better than I do. But definitely listen. Let's see. I mean, I think this goes without saying. The United States will certainly not recover by raising taxes or printing money. I think we don't need to read all of that. I mean, that's pretty obvious, right? To finance the staggering fiscal effort, the Democratic Party leader Joe Biden is announcing a massive tax hike. Like, are you kidding me? You're talking to people about hiking taxes right after C-19. Like, are you crazy? Like, are you trying to lose the election? That is the most interesting. That is his stance. He has gone on record to say that he would do it. Ridiculous. I'm not going to actually read all this. You can read this one for yourself. I think it's pretty obvious. Let's just go to the conclusion. The proof that the U.S. problem is a spending issue is that even those who propose massive tax hikes are not expecting to meaningfully cut the deficit, even less so to reduce the debt. That is why they add massive money printing to their magic solutions. It will not work either. And this reckless policy may destroy the U.S. dollar's reserve status. Yeah, folks, for those of you living in the United States, you've probably always been living in a, given the available range of ages out there and the people that listen to this channel, you have always been living in a world where the U.S. dollar was the world's reserve currency. Everybody traded in dollars. When Venezuela wanted to do a deal with China or Russia or Brazil, they didn't do it in each other's currency. They did it in U.S. dollars. Like, that's an example. If the U.S. dollar becomes so weak that it is no longer the world's reserve currency, it's going to drop in value so fast, it is going to have a very devastating effect on the U.S. economy and your daily life and your comfort level, which is why you should not be 100% in the cash gang. You should be divested in everything. Precious metals, crypto, bonds, maybe little stocks depending on the market, real estate, other appreciating assets. You should not be 100% cash gang, folks. That is super risky. And finally, the author of Rich Dad Poor Dad, Robert Kiyosaki, is warning that real estate and gold is out and crypto is in. Let's read this one. Bitcoin's popularity among traditional investors has grown over recent months as governments and central banks take drastic measures to offset the economic damage wrought by the coronavirus pandemic. The Bitcoin price, after rebounding strongly from a C-19-induced March crash, has been treading water for the last 2 months, despite a raft of seasoned investors announcing their intent to buy into Bitcoin. Now, Rich Dad Poor Dad author Robert Kiyosaki has been previously praising Bitcoin for its scarce properties, has warned real estate and gold buys are being phased out, and the Bitcoin world is coming into view right now. I think it's important, especially for the old guys like me, to understand the crypto world because that's the world that's coming into view right now, and us real estate and gold guys are being phased out. Kiyosaki told his radio show listeners, later uploaded to YouTube. I did not know he had a YouTube channel. Okay. Oopsies.
This is the Rich Dad Radio Show.
Cool. All right. Boom. Subscribed. And let's see. Published in 1997, Rich Dad Poor Dad advocates the importance of financial literacy and became a New York Times bestseller, going on to sell around 40 million copies worldwide. I remember my dad didn't buy me this book, but he did buy me Richest Man in Babylon, which is a very other similar book, and it has a lot to do with saving money and making that money work for you. Kiyosaki, who is speaking to Bitcoin and crypto investor Anthony Pompliano, has predicted the Bitcoin price will reach $75,000 within 3 years from just under $10,000 now. You know, how old is this article? July 9th. Okay, so 20 days. I'm going to be honest, guys. 75,000 in 3 years? That's bearish. I think it's going to go way higher than that, me personally. I think you can add a zero to that. I could see $750,000 Bitcoin within 3 years, especially as the value of dollars drop. Wouldn't even be that much money. If we're going to go into hyperinflation, what is $750,000 even going to get you? Seriously. There's this battle on today between old guys and young guys. Kiyosaki pointed out investors like Warren Buffett, known as the Oracle of Omaha, who are anti-crypto. As an old guy, it's taken me a while to get onto Bitcoin and crypto, but now I'm buying it, Kiyosaki said, adding that he did try to buy Bitcoin in late 2017 when the price was nearing 20K, but didn't complete the deal. It's probably for the best. Kiyosaki's interest in Bitcoin was peaked earlier this year when Bitcoin went through a supply squeeze known as a halving, just as the U.S. Fed and other central banks around the world were ramping up money printing to prop up economies ravaged by C-19-induced lockdowns. Bitcoin and other cryptocurrencies are now challenging the hegemony of the U.S. dollar and other fiat currencies. That is right. In May 2020, a historic event cut the daily incoming supply of Bitcoin from 18 per day to 900 per day, a sort of quantitative hardening, opposite of what the Fed is doing by printing trillions of dollars. Correct. Central banks, in simplest terms, create money out of nothing. They create fake money and loan it to governments. Bitcoin, on the other hand, is completely decentralized, meaning that nobody can manipulate the market and there's not any single point of failure. Kiyosaki wrote, adding that it will be interesting to see how the long central banks will tolerate the competition from cyber money before there is a showdown. Yep. Yep. Agreed, by the way. This is important. Last month, legendary investor Jim Rogers warned Bitcoin and similar virtual currencies beyond the influence of government will not be allowed to survive. While it is true that Bitcoin doesn't rely on a government to exist, it could still be made illegal. That's true, folks. The U.S. government could say, F you. I mean, like, I could actually really see it happening. Let's just say someone from the far left gets into power, Congress and the Senate go to the left, the judiciary goes to the left. For sure, they'll turn our dollar into a digital dollar. They'll control the price. They'll be just as corrupt as China, and they'll say, no, you cannot have Bitcoin. It's not fair. It's not fair to other people who didn't invest. If we find out that you have Bitcoin, we're going to raid your house and steal all your assets. Like, I could actually see that happening. I know that sounds crazy, but in this Marxist leftist push that's happening, it's all about jealousy. And I could see people at the top being jealous of other people's wise decisions to invest in crypto in the 2010s decade. Anyway, let's end it here. That is the financial news for today. And let me know if you have any feedback on these types of videos. It's a brand new channel. Otherwise, take care. Whoops.